Alright guys, welcome to this lecture on Marubozu. So basically, what is this candlestick all about? Now basically it looks something like this. Basically you'll see a very long body and you'll see no wicks, and sometimes you'll see small wicks, lower wicks, and also small upper wicks. Like I said, ideally you see large body with no shadows, and it's normally 2 to 3 times the size of previous candle bodies, meaning a lot bigger than the previous candles. What does this mean? It means that there are a lot of buyers and there are a lot of sellers, okay? And this can be found anywhere, in the beginning of the trend, middle of the trend, and end of the trend. And when it's found in different places, it means different things. So if I ask you now, which one is a stronger bullish signal? Of course, all three are strong because of the large body, but relatively, which one is stronger? The answer is the one without the wick, which is the third one, then followed by the first one, which is the second strongest, then the weakest one out of all these candles over here is this one, because it has an upper wick, where the sellers kind of came in and then pushed the price down a little bit at the end of the session. So how about bearish signal? Which one is the strongest? Definitely the one without shadows. The second strongest would be this one, because buyers pushed the price up and then sellers came in, pushed the price down all the way here. Then the weakest out of these three is this one, okay, because it has a lower wick. Now the thing is, you can find large candles at different places. Example, you have a bearish trend over here followed by bullish trend. Then you can see a big red candle over here, big red candle over here. Now a big red candle in the middle of the trend would mean that price would still continue to go in the same direction. So if you see a Marubozu in the middle of the trend, it is a continuation signal. But if you see it at the end of the trend, it can become a reversal signal. So you can see over here, there's a bullish trend and buyers push the price all the way up. And when you see a big long candle like this, price would become overextended, and hence traders who want to buy, they already have bought, and hence they'll start to take profit. And when people start to take profit, then some people are gonna get stopped out. Then sellers are also starting to come in because they see price going down, and hence they push the price lower and lower and lower. And also when you see a big bearish candle after the end of the downtrend, it increases the chances that the bullish trend is going to end or has ended. And you can see over here, downtrend, at the end of the trend you see big bullish candle. So this is another clue that the bearish trend is going to end, okay? Aside from the fact that price also make an almost 90-degree free fall, which is also a clue that tells you that the bearish trend is going to end. And make sure you apply all the indicators that I teach you in this course, okay? Don't just rely on candlestick signals alone. So for example, you see the end of this bearish trend over here, then you see a massive reversal, okay? This is one of the clues that the trend is going to end, and you see a couple more over here. But sometimes the reversals can be false, especially when your momentum indicator goes to overbought, okay, when the price shoots up. So you can anticipate a bit of reversal over here, especially when it tests your 200 SMA, and another massive reversal here. So you can tell that at this point RSI did not really go as overbought as the previous points. In fact, didn't really go to overbought level. So you can anticipate that the price is going to continue to go up from there, okay? And make sure you add this with confirmations using your long-term trend line. So a Marubozu would be very significant when it breaks above a resistance, okay? So you can see price made double bottom over here, and then a big massive bullish candle where it broke the long-term bearish trend line. And of course, when it broke this trend line, stochastics went to overbought, and you're going to anticipate a little bit of reversal, maybe back to 200 SMA or 100 SMA or 50 SMA. But you can more or less tell that the price is going to go up from this point onwards because of a couple of clues. Price made double bottom, broke trend line, stochastics went to oversold, 50 cross above 100, price testing 100 SMA again and again, and hence high chance the price is going to go up from here. And normally when price breaks a trend line, it's going to retrace. You see this pretty often, so put in a little bit more patience, wait for the price to retrace a little bit to a support level, and then you can enter from there. Don't just enter when it breaks above a massive trend line. Okay, so again you can see a couple of large candles over here, right here at the end of this trend. So you can see after these two big bearish candles, price went to a level of indecision, okay, with two spinning tops. Then price made a firm decision by having a big bullish candle, and you know from here onwards that price is likely going to continue to go up. And also your stochastics went to oversold. So very often times you see a 90-degree drop, bearish candles, and maybe it ranges a little bit, then followed by a big bullish candle. And this is a good indication that the trend is going to end, the bearish trend is going to end. But of course, it doesn't happen all the time. But when you do see it, please take note, okay? And if you're in a trade, make sure you take profit. Okay, one more example over here. Now I just changed my momentum indicator. And again, the same thing. End of the trend, price made a 90-degree free fall, big bearish candle. Then it ranges a little bit, then followed by a big green candle. So you can see the same thing, CCI, your momentum indicator went to oversold. Okay, of course price wouldn't retrace straight away and go up on an uptrend. Sometimes it might range a little bit for a couple of days, couple of hours before it goes back up. And when it comes to spotting retracements, you can put in your 5 EMA, because the thing is, when the price retraces too far away from 5 EMA, it's going to go back. Okay, because you can see 5 EMA is like a magnet. If you have attended my previous beginner course where I go into detail 5 EMA, you would know how to use it properly. Okay, but basically 5 EMA is like your magnet. When it detaches too much, it's going to go back. When it detaches too much, it's going to go back. Detaches too much, it's going to go back. Okay, now another example here. Now in this case, your big bearish candle occurs almost at the beginning of a major downtrend, and hence will this be a reversal candle? Not really. It will be a continuation candle. And the thing is, CCI, it went to oversold, yes, but when you see oversold signal at the beginning or at the mid trend, it actually just means that the bearish momentum is going to get stronger. Okay, so it doesn't mean that, oh, oversold, then you must buy. Doesn't mean that oversold, then the price is going to go up. Okay, it depends on where the oversold signal is formed. And moreover, you can see that 50 is below 100, and then after that 100 cross below 200. You know that this is a downtrend that is forming. Another example over here, so you can see that sometimes a big bearish candle, just like this one, can just mean a retracement. For example, if you see a big red candle in a bullish trend, it sometimes can just mean that the price is going to retrace. And in this case, it retraced down to 200 SMA and 100 SMA, and then it bounced back up. You can see a big green candle over here, so it just means that the bullish momentum is strong in this case, because this is just the beginning of a bullish trend. 50 SMA just crossed above 100, and 100 just crossed above 200 recently. Okay, so you can see price continue to go up from there. Okay, so I hope that this lecture gives you a good idea on how to analyze big large candles. So with that, I'll talk to you in the next lesson. Bye.